those who missed it, thank you so much.
Okay.
Perfect.
Here we go. And so Andy is with U.S. Commercial and Business Capital, and he's going to share his screen and discuss with us today some interesting topics that you have lined up for us regarding a no money down program. You have some case studies, I think, for that, and other programs that will help these commercial agents with their clients. So thank you, Andy.
Thank you very much, Kimberly. Thank you, everyone. Meny, especially for allowing me to join in this segment. I know we have, minimal time with all of us being so busy, so I do appreciate you allowing me to chime in. And one of the other things that we're going to discuss as well is, how to, add value to your clients with some of these programs. How do we, create more leads for you and things of that nature? Not that you probably, don't have your own organic type of methods, to get lead generation and get leads. However, we're going to explain to you a couple things that, has worked for other agents throughout the United States. And hopefully, you could take some of those back with you and use them and, will benefit your business. So I'm going to hang on a second here. Let me stop the video real quick. I'm going to go ahead and get the presentation up here real quick regarding the 100% no money down program. Okay, so Kimberly, could you see if Andrew is on? Andrew Kuby?
I'm here.
Oh, okay, great. Hey, Andrew. So
I'm here.
great. So before I start, Andrew is the the president and CEO of the company, and he's located on the East Coast. I'm here in charge of West Coast production. I'm Andy Tabag. Andrew, would you like to have a couple little comments here before we get started?
Yes, hello everyone. My name is Andrew Kuby. I'm the president of U.S. Commercial and Business Capital. I'm 52 years old. I've been in lending since 1996. So we've been doing this a long time. We work with commercial investors as well as business owners. So kind of what our name says, U.S. We do business all over the United States, commercial and business capital. So we work with commercial investors as well as business owners all over the United States and helping them find funding sources for their projects. And Andy's going to begin talking about this program that we have. It's a specialty program. I literally probably talk to at least 10 commercial agents a week or every couple of weeks. New ones I meet all the time, and they haven't heard about this program. And the reason we're so, I can start the video.
I don't know if you have video capability. There you go.
Okay, yes. All right, I can fix it. So everybody, I guess you can see me. So basically, the reason that I really started pushing this program is I noticed that this was all, if you look throughout the country because of COVID, because of businesses shutting down or working out of their house, there was tons of inventory out there in the owner user space. That space is obviously your office, retail, medical, restaurant, industrial, sports and recreation, to name most of them. So when I found out about this program, I have investors that buy multifamily, but the investor would, it took them a while to find a property that either his bid got accepted or found a property that he liked. These are properties out there right now. There's tons of them just sitting there. And this program allows business owners to buy commercial real estate for their business.
Sorry about that.
That's right. This program allows business owners to buy commercial real estate for their business for no money down, and they can walk away with cash at the closing to help their business grow. We call this the rent replacement program or the rent swap program. So again, it's for business owners that are currently leasing their commercial space. They're looking to buy commercial real estate for no money down. And they can walk away with cash at the same time to help their business grow. So Andy's going to go over the program with you guys, and then I'm going to share how you can get buyers under this program, what we've been seeing, what other commercial agents across the country have been doing, and how they've been generating buyers and making more, helping more people out and getting more, making more money for them and their families as well. So great to meet everybody. Andy, if you would like to go ahead and begin the presentation, that'd be awesome.
Yes, great. Thank you so much. So this program, let's see here. Okay, good. Sorry, trying to figure out. Okay, got it. Wow, this thing's fast. Okay, so the no money down program basically applies to commercial real estate. Could be purchase, could be construction. The program also allows for, as Andrew was saying earlier, resources, for growth, in the areas of, working capital, which is basically, salaries and things of that nature, equipment, purchase of inventory for your business, allowing you to expand your business. And we'll have a little case study scenario around expansion and a working capital later on in the presentation. And it could also be used to extinguish high interest current, business debt. It's really fast. So what are some of the parameters when you start talking to, your potential buyers and things of this nature to kind of see whether or not, they would, be a good candidate for this program? First of all, they have to be, in business a minimum of 2 years. They must have filed, 2 years worth of tax returns. And this is on the business, tax returns for the business. Owner occupancy must be at least 51%. You could, lease out the other space, don't occupy it, but it has to be at least 51% owner occupancy. Okay.
Sorry, Andy.
Yes.
I don't know if we only see your introduction slide.
Oh. I'm wondering, could you control it on your end?
I don't have your slides.
Okay, hang on a second.
Uh,
Let me see if I could do something a little different here.
I think if you put it in presentation mode, then might be a little bigger.
I've got it in here. Do you see that?
Now you just have to share your,
I can see you now.
just share your screen.
Okay, hang on a
Green
second.
button.
Okay, so
There we go.
Okay.
all right, so let me see. Are you able to
I
see that?
Yep,
How about
I
this
am
one?
on my end.
Then the no money down part?
Yep.
Yes.
Oh, okay, great. Okay, so I got it.
You can put it in the presentation view. That might make it a little larger for us.
Hang on a second.
Right. Yeah.
Where is I always use just
Just try clicking that little button that says presentation view or presenter view.
It's all the way to the right, Andy, above below resolution.
all the way to
Go
the
down, resolution to the right.
over
There you go,
here.
show presentation.
Yeah, I got it. Okay, so. Huh, okay.
Just check the
Use
box.
presenter view.
I got it. Okay, very good.
Oh,
Okay, so let's try to reshare. Get started. Sorry about that, folks.
Okay, well, we can see it a little bigger now, so.
Is it a little bigger?
Yeah.
Okay, great. So down to the very bottom, bullet, it basically is a term of 25 years. And we have various prepayment penalties of 3, 5, and 7 years, right, Andrew?
Yeah, I'm not trying to, I'm not, what screen are you on, Andy? Still on screen 2. Commercial real estate purchase, construction, resources for growth, working capital, equipment, inventory expansions, and current debt.
Did it change?
That's the screen that I have right now. Is everybody on the same page?
Yes, just click on slide number 3. That should
No,
work.
let me, is that going to be any better for you guys?
We just see you right now, bud. So it's on the left-hand side, you'll see where you can click on each slide.
Yeah, let me go ahead and just. Okay, so
There you go.
There you
Let
go.
me,
okay,
let me just help you for a second. It's sorry to cut you off, but you see at the very bottom, you see the scale, it's a 62%.
yeah.
See it? Yeah, don't touch it. Right next to it on the left. No. Oh, okay. I mean, you can do that, or to the left of it, there's a small button. No, not this one, the one on the right. Click on it. It doesn't do anything.
This one over here, fit. This one over here, right down here.
No, or
Yeah,
on
that's
the
it.
top, on the top left, you see it says from current slide. Just click from current slide. This big icon. No, the second one. Click on it. Yeah, click on it.
Okay,
Okay, that's fine. Something in the settings is not properly set up, but just as long as you keep going and moving the slides and we can follow you, that's fine. Thank you so much. Sorry to interrupt.
do you actually see the change?
Yes,
Yeah.
as long as you click it on the left, everybody can see the change.
But right now we're on parameters, right?
Yeah,
Now, are you like on the second page of parameters?
we're on the number 3 slide, Andy.
Yeah, I mean,
Minimum 2 years in the business.
I do this all the time. This is like the first time I've had kind of these issues. So I'll just click from here and we'll just go with that. Okay. So
Okay.
basically, we already talked about the 25-year 25-year term, parameters. The next one you see average turn time is 60 to 70 days.
Yep, we see it.
Okay, great. The nice thing about this is the way we qualify. The qualifying income is really the net income that is represented on your tax returns, plus any current rents that you're paying, any current lease payments for your existing property because you don't own it. So you add back your rents, any kind of depreciation. So for instance, if you have a company that has heavily in equipment, you probably have a lot of depreciation expense. So you would add that depreciation expense back. Any kind of interest on any kind of notes that you may have for the business, you could add that back. You could also add any kind of amortization. What's amortization? Anything that's kind of prepaid, right? You have your prepaid insurance policy and you make monthly amortization. You could add all that stuff up. So the nice thing about this is they take your net income and really just provide it on a cash basis. They're taking all these other things that are non-cash and they're adding it back to your net income. And that's going to be important for later on how we continue to qualify for this particular program. Okay. Really having a hard time navigating through this. Okay, so here, other documentation that might be required. Obviously some personal documentation for collateral purposes. The documentation around the business entity that obviously is applying for the business loan, and other businesses owned. You may have 2 or 3 businesses under umbrella. We would like to basically see those businesses as well. Lastly, under documentation, there may be a need, again, depending on the program, for the tax returns, for your personal tax returns for the last 3 years, your client's personal tax return, personal financial statement, and we have to complete an application with the SBA, and we'll pull a credit report or use an existing credit report that they have. Anything you want to add to the documentation, Andrew?
No, I mean, it's fairly simple. It's need the last 3-year tax returns, personal tax returns, last 3-year business tax returns. And then if they own any other businesses, we need those last 3-year tax returns. Obviously, if they've only been in business for 2 years, we wouldn't need 3. So it's, it's just their tax returns, fill out a couple applications, and then basically I usually get an executive summary from the client that just explains who they are, why they are looking to buy real estate for their business, how it's going to help their business grow. And then if they need any additional money in that executive summary, I'll get them to break that money down and why they need it. And then they'll complete a 2-year pro forma. And we'll help them with all this documentation. We don't expect you to do that. That's our job. So we're just kind of giving you a kind of an overview of what we're going to need. And I guess we'll learn more here in the case study of, so just to recap so far, we're looking for businesses that have been in business for 2 years. They're showing a profit on their tax returns. They're not showing the IRS a loss. And they have about a 660 credit score. If it's lower, we can get it up. But that's pretty easy. And then how we calculate to see what they qualify to buy for no money down. Andy's going to go in that. But basically, we take their net income, we add back in all the depreciation, all the interest, etc. And then we find out, well, how much are they paying a year in rent? So we take the net income, including all the other stuff that we can add back in. So let's say, for instance, a client makes $100,000 a year net income. And let's say, for instance, their rents are $50,000 a year. I'm sorry, let's say the rents are $5,000 a month and $60,000 a year. So we take that $100,000, we add it to the $60,000. That's $160,000. $100,000 net income, $5,000 a month in rent, $60,000 a year. 100 plus 60,000 is $160,000. And then we take that $160,000 and we multiply that times 8.5%, 8.5 times. I think Andy's going to use a figure of 8, but it's kind of, we can do it, be a little more aggressive and multiply by 8.5 times. So if you take 160,000 and you multiply it by 8.5 on your calculator, it comes to $1.36 million. So let's say, for instance, that client, once they found an office building they wanted to buy for $1.1 million. Well, they have $260,000 left over. That's where getting the money for all these other things like equipment, working capital, they have any high interest rate business debt. They can include that into the purchase of the loan. So literally, we are taking clients that are business owners, helping them buy commercial real estate for no money down, and they're walking away with cash at the closing to help their business grow. All right, Andy, you can go ahead.
I'll go ahead and illustrate that. So this is a client of ours, Brian, and Brian came to us.
Byron.
Yeah, Byron came to us. He owns an insurance company. His previous location was limited in space. He wanted to grow his company, expand, hire more agents, and just basically, grow, right? So he looked for a property. The property, was worth, or the purchase price was $2.5 million. Throughout this process, he determined that he needed another $75,000 for business expansion, purchase of equipment, maybe build out, a couple of offices, and whatnot. And he currently, in this particular space, he would occupy 60%, and he would actually look to lease 40%.
So let me expand on that a little bit. So I went into Byron's office, and Byron had been in the insurance business, auto insurance, and went into his office. He had all his agents in cubicles. He had one office for himself. He had no training area for any new agents, had no conference room, and he wanted to grow into health insurance. And in order to do that, he needed more space. So he was actually able to buy a $2.5 million huge office building to not only grow his business, but also to help him pay his mortgage. And so he was able to, I think he ended up leasing 40% of that space. I think now it might be 45%, but that's a great program. And he was able to expand his business under this program. So it's an awesome program. Has anybody heard about this?
You getting anybody raising their hand, Kimberly?
Hi, question. Hi, how are you?
Fine, thank you.
Nice, Aman.
Question, is this a private bank?
No, what this is, it's an SBA 7A loan, okay? But we have 4 banks throughout the country that do these loans at 100% financing. So that's why not many people have heard about it, because there's only 4 banks that we know about that do this. So what happens is SBA will guarantee 75% of the loan, and the lenders will guarantee the other remaining 25%. And I know that, I don't know how much experience you guys have in the SBA 7A, but once we have a ratified contract and we have the client's docs, these lenders are closing these loans for us in about 60 to 70 days. So it's no 90-day, 100, it's no 120, 100. We've heard nightmares about SBA and how long they take. These are experienced lenders that this is all that they do, and they know how to close it. They know how to close it quickly. They underwrite everything in-house. They correspond with SBA, so it makes the process go by a lot faster. So I don't know if that answers your question, but that's the loan program.
Thank you.
You're very welcome. Okay, so thank you, Andrew, for that additional insight towards this case study. So let's break down, kind of what the numbers look like. Okay, so did I show here we go. Qualifying. Okay, this is kind of where we're talking about the tax returns and, the how do we divide things and multiply and all that good stuff. So let's just go through this really quick. So on the tax return, basically on a monthly basis, this company had about $25,000 on profit. They had about $9,000 on rent. Depreciation was about $1,000. So their monthly qualifying income was $34,500. Okay, so Andrew indicated earlier, we take that and, we really look at everything on an annual basis. So the qualifying income in this particular case is $414,000, which basically is, we have the profit and we're adding back, the rent, we're adding back the depreciation to come up with an annualized number or annualized income number of $414,000. You multiply that by a conservative factor of 8 to arrive at roughly 3.3 million. And any questions on how we kind of quickly determine, what the buying power is of your client? Andrew,
And I'll mention too that this program goes up to $5 million.
Okay, great, thank you. Okay, so now that we have a $3.3 million, earning power, Simon, is it? You have a question?
Yeah.
Yes.
Yeah. Question is that the rent, does that include triple net, everything, all together, all in?
Andrew, was this your client? Was that an all-in rent number?
I mean, that was an all-in. That was just what they were paying in rent. You're asking if it's triple net, like a triple net lease situation?
Yeah. So how do you do it? You add everything, the triple net costs, if there are CAM charges, is that all considered rent? Or you
Yes,
just
whatever
calculating the base rent?
We're just calculating the base rent.
Also, you don't calculate triple net.
So when you say triple net, I understand what triple net is, but what would be in that above the rent that you're speaking of?
Well, for example, a property could have a base rent of $5,000 and it could have a triple net of, let's say, $2,000, which includes the property tax, the insurance, and all the other expenses.
Common area.
Yeah, we're just using that. In this situation, we're just using the base rent.
Oh, so you, oh, so the triple net is
yeah.
not included.
Yeah, triple net's
Okay,
not included
I
in
got
this program.
Oh, okay, I got you.
Okay, so now we've got a qualifying amount of 3.3 million. And basically this is, you could tell here, this is like an older deal, right? So in this particular case, like I mentioned earlier, he found a property, that he liked at 2.5 million. He wanted that additional, 75,000 to expand. So he had a loan amount of 2.575 million. At this particular time, we had a rate of 5.5%, and the amortization term is 25 years. Created a monthly payment of roughly $15,813. Okay, so that's great. That's fine. It is what it is, right? But if you remember, he leased out the additional 40% of the space. Okay, so if you take what he leased and apply that to the mortgage, like Andrew was saying earlier, to help him, make his mortgage payment, he actually, have a net positive effect. So the payment of $15,813, he had his old lease payment of $87.50. He charges the tenant, $7,500 a month for that 40% space. So he's actually cash flowing, $437, for that particular, property, on a monthly basis. So this scenario was like the best case scenario that you would possibly want. I mean, you own property and you're basically cash flowing it, right? Because most time, your lease payments are going to be much lower than your cost to own, right?
So let me mention something, Andy. So when a client comes to us and says they need, this is an example I always give. If the client comes to us and says they want $300,000 for their business, and another client comes to me and says, hey, I'd like $300,000 for my business, and I'd like to buy this commercial real estate over here for $1 million. The $300,000 that the client comes to borrow for their business is based off a 10-year amortization. When they own the real estate and they get the $300,000, it's based off a 25-year amortization. So when you run the numbers, what a client's paying right now for their lease payment, what their payment would be on the $300,000 if they lease versus what it would be if they bought the property and got that money on a 25-year amortization, what you're going to find is the payment's going to be cheaper every month if they own the property. Because it's based off of, when they get that cash, it's based off a 25-year amortization, where if they're leasing, it's based off of a 10-year amortization. And therefore, when you run the numbers again, it makes more sense for them to own the real estate. So where do we get the business? That's the key. So we already know that there's, in your area, there's about 500, somewhere, I think Andy looked this morning, there's about 500 of these owner user properties that are on the market. Is that accurate, Andy?
Yeah, it's about right under 5 million or less.
Right. So it's a pretty, when I go to the business owner, it's a pretty easy sell to your business owners, clients that are leasing. Let's say you have a business owner that's paying $10,000 a month in their lease payment. That's $120,000 a year. That's over $1 million that they're going to spend over the next 10 years on somebody else's mortgage. Doesn't it make more sense for them to pay that towards their mortgage over the next 10 years, leaving a legacy for their family instead of their landlord's family? And I always want to ask the clients when they want to retire. I had a client recently that was 55 years old. He said he and his wife would like to retire when they were 65 years old. My next question to them was, what are you going to do in 10 years? You just going to shut your business down? And they're like, well, what do you mean, Andrew? Well, if you don't own the real estate, it's going to be very hard for you to sell your business when you hit 65. But if you own the real estate, now you're onto something. Not only will you be able to sell your business that you put the last 30 years of your blood, sweat, and tears in, but you're also going to be able to sell the real estate and the business together. And you and your wife can go off in the sunset and retire a lot easier if you own that property. So where do we get the business? You know, we get a lot of business from CPAs, accountants. They understand the importance of business owners that are currently leasing their real estate, why they should own real estate. And obviously the tax benefit. So they look like a hero when they go to their business owner that they do taxes for and say, hey, listen, you don't have to write that $50,000 check to the IRS this year. So they're a great place. If you know any accountants, CPAs, even your own, share this program with them. Let them know about it, because they'll have clients for you right now that need a tax write-off and they need to own the real estate. I have a realtor down down on the East Coast, down in Atlanta, Georgia. He's a residential realtor. He's got about 700 agents that work for him. He did a podcast under this program, and you know, right now on the residential side of the business, these residential realtors are scrambling because, you know, if they closing 10 loans, now they're doing 2. Or, you know, if they sold 10 properties, now they're selling 2. If they work with 10 buyers, now they're doing 2. I'm not sure how it is in California, but most parts of the country, you know, they're thinking of other ways that they can make some money. And a lot of residential realtors don't like to play in the commercial space. So what he did was we had a video that we're going to show you, maybe you've already seen, that we have created for commercial agents to help market their database. And that's one of the ways they're marketing it, is to other residential realtors who, again, don't like to play in the commercial space, but would love for you to send them a referral for a lead. Everybody, all residential realtors have worked with a business owner in the past, either sold a property for them or worked with them as a buyer that was self-employed and are leasing commercial real estate. So that's another great avenue to get leads for this program. The other thing that we've seen is chambers. You know, if you're a member of a chamber, you'll probably have, you know, you'll be able to hit the masses and let them know about this program through the chamber. When the chamber sends something out, people open it up, and it'll definitely create a buzz, and will give you a great marketing tool to be able to reach out to these business owners who are currently leasing. And then, you know, the other way would be, you know, real estate attorneys. And then also what we found is commercial leasing agents. We have commercial leasing agents right now that are already starting to work for January, February, March, April. And what they're doing is they're going back, they're looking at 2023 and what commercial leases are getting ready to come up. And they're contacting these business owners, say, hey, listen, you know, your lease is coming up in February. You can renew the lease, or you can look at buying commercial real estate for your business. And obviously the commercial leasing agents would love to, instead of have that property be leased again, be able to sell the business owner a property. So that's, you know, I'm sure there's commercial leasing agents throughout your organization. I would say get with them, talk to them about the program, and see what you guys can work out in helping business owners become buyers. So those are some ways, just right off that we've seen that really have worked as far as creating buyers. Do you have the video, Andy? You'd like to? I don't know if they've seen.
Well,
the
I
video
want to Kimberly's going to show that. However, I have a question from Miriam, and I want to make sure that we discuss that because it could help everybody. Her question is: are commercial development projects eligible for such loans? I'm assuming the 100%.
So under this program, we have programs for commercial developers. We work with commercial developers. They're more of an investor. So this program is for your owner user. So to kind of go back to your question, if that property was to be occupied by a business, and they were going to occupy at least 51% of that property for their business, then they could lease out or sell 49%. But this is more for your owner user client opposed to your investor. I hope that answers the question. So we do have loans for investors that develop neighborhoods, or they develop, commercial properties. We have other loan programs for this. This program is ground up construction. So we had a doctor recently that had his own family practice that couldn't find a property to buy that he wanted. So he bought some land. He developed a building or a couple buildings all in this loan for no money down. And he was able to rent it out. He was able to do a triple net lease to CVS. And he got another doctor he leased out to. So he was able to create income streaming in under that scenario. So yeah, it can be ground up as well, but not for developers that are just going to buy the property to lease out.
Right. We have a current client that's looking in January, got a property, looking at a property and basically getting plans and permits that appear to be, that would qualify under this particular program as well. So in the planning stages, is that correct? We do, we're able to do this with, plans and permits in place as well, Andrew?
Yeah, so we're able to run through the process and get a client approved prior to their lease ending. Obviously, we want to start working with the clients 3 and 4 months out, just in case there's anything that they need to take care of. So we have plenty of time to be able to help them buy a property. So even if they don't have a property that they are interested in buying yet, we can still go through the whole process and get their business approved. So in regards to that question, yes, we can work with that client right now, even before they have gone through the city and gotten all their, all their plans done or gotten everything they need to do, the permits, et cetera. So we can start working with them early to let them know how much they qualify for and give them a game plan for financing.
Perfect. Okay, great. Let me move on here to the next slide. Basically, the property types that are, qualify under this program, as we talked earlier, office, retail, and industrial, multifamily, hotel, mixed use, land, not investment. I don't know why that got in there.
Well, investment, yeah, we work with investment properties.
Yeah, and then
Investors, yeah.
we're able to do like special purpose, and we have avenues for single family as well.
So let me kind of go over all that. So as far as the office, retail, and industrial, we have programs for owner user. And under this program, we also have conventional programs for owner users. And then we also have programs for developers and or investors under the office, retail, and industrial space. So both for owner users and investors. Multifamily, which is considered 5 units on up. We have programs that if it's 100% occupied, we can help clients buy those properties. If there's some value add, let's say the property's, it's not a good property, it needs rehab. Then we have bridge lending that can help that client get money for 24 months or less for, you can go back to the other slide, Andy, if you could. Thank you. So we have programs for the multifamily space for rehab, as well as turnkey ready properties that investors are looking to buy. Hotel financing. So hotel financing, we can do that under another program that we have under the SBA, which is the 504 program. That will allow us to go up to about $15 million, somewhere in that neighborhood. The reason why that's a great program through the SBA, it only requires 10% down. Mixed use, again, mixed use property could be for the no money down program. It could be for other properties. We have about a $12.5 million loan going on right now. It's a mixed use property in Cleveland, Ohio. where the client's putting down 10%. The seller is holding 20%, and the lender's providing 70%. So that's a unique program. That's a bridge loan to go in. They need about $1 million in rehab, and they have an ARV. The property is going to be worth about $17 million upon completion of that project. So we're really a one-stop shop for lending. I've built relationships over the last number of years with different lenders. We're probably averaging somewhere around 100 leads a month. So we look at a lot of different deals. We know where to go with these deals. And it's just not Andy and I. We have a team of people around us to help make sure that the client gets the best experience during this loan process. Land, again, we have land loans. We have some creative land loans. And I even have a lender right now that the client's not bringing any money to the closing. They're providing 50%, and the seller's providing is holding paper for 50%. So what you'll see is we have really, we do the cookie cutter conventional stuff, but we also have some out of the box program.
Did we lose him?
It looks like we did.
Oh, okay. I'm just going to elaborate a little bit, kind of what he talked about here about the commercial space, in particular. We provide, purchase and refinance opportunities. Like you said earlier, we're working on a rehab right now in LA, and they're going to look for basically a bridge loan to get some, value adds, get the property, basically up to par. We also do, hard money loans, construction. Andrew was saying something about investments, which we do as well. We also provide opportunities around, business line of credit, financing for equipment, merchant cash advance, things like the cabbage.com or whatever, how they have, those little, much smaller loans. And then we do residential investment as well. So as Andrew was saying earlier, we're not a a bank per se. We're a broker. So it's our responsibility to field every opportunity that we can, business of yours, and find the appropriate financing for it. I mean, that's kind of why we're here. So we have a lot of clients that come to us with bank turndowns or banking offers that doesn't make sense. I have a client that came to me this morning, after we discussed, and he said, "Hey, I went to I think it was U.S. Bank, and they only approved me for $1.5 million with 20% down." So I basically showed him the no money down opportunity, and with his financials, I mean, he was now able to afford and look at and purchase the actual property that he was looking for, and still have an opportunity to take advantage of the quote unquote equity in his earnings. So there are a lot of benefits to this program that your current lenders, like banks and whatnot, won't be able to even touch. Okay. And then we will also obviously, put you in the best opportunity for your client as far as, rate and costs, because we can. I mean, we don't have all those, exorbitant, overhead costs and things of that nature that we have to cover. So we're a little bit more flexible, not with just program, but also trying to establish and get the deal done. I think that is about it. Here's our contact information. I know this is being recorded. Please feel free, to contact me here, on the West Coast. Contact information, as such. And is David on, Kimberly? You see?
Yes, I'm here.
You're
Hello.
here. There you are. Hey, David, how are you doing, my friend?
Andy, how are you, man?
I'm doing great, man. I know you're kicking butt over there in that office, but I wanted to, Kimberly's going to basically, play this video. It's our gift to you, and
Thank you.
we'll do some other things if you'd like. But Kimberly, if you got that queued up, this is how a lot of other real estate professionals across the country are garnering business. You've got all the everything is. Do we have the sound?
Yes, sir.
Equipment, supplies, and working capital. Are you a business owner leasing your current business location? That means you're paying hundreds of thousands of dollars each year towards someone else's mortgage. Ouch. Why not put that money back into your business? With David Yasher at KW Commercial, we help business owners purchase commercial real estate for no money down. You will also be able to get up to $200,000 for equipment, supplies, and working capital, all in the same loan. Set up a meeting with us today and learn how you can buy commercial property for absolutely no money down. Visit our website or call us at 310-710-0626 to speak with our team today.
Wrong number, but that's okay. So, Andy, first of all, thank you very much. I appreciate it. The phone number, you have my cell. We'll just put the office number down, which, you and I can talk after this. Can you hear me? We cannot hear you. Hello, you're muted.
There you go. Yeah,
Andy.
you know what? I might have
I'm
pulled
back
up
just
the
to let
card
you
or some other item, but let's talk after I get that thing right for
Of
you.
course, of
Okay.
course, of course. Thank you very much.
Andy, I'm back as well. I'm sorry about that, guys.
No worries. So
So-
we just played the video. I gotta get with David offline. We're gonna make a little edit there, and then we'll be good to go with the video. Anything else you want to
Exactly.
close on, Andrew?
Question. What are the interest rates? And also, second question, for the development part of this 100% financing, how much time do you have to develop the property?
You want to answer that, Andrew?
Yeah, so the first question, the interest rates on this, it's prime, right? It's the prime rate, which is 7%. So it's prime plus 1.75. So you're right. You're right under, right around 8.75 right now on a 25-year amortization. When rates, we all know rates have gone up over the past several months. What I usually do if a client asks me what the interest rate is, I explain that to them, but I show them what they're losing. Going back to my pitch about, how much are you paying a month right now for somebody else's mortgage? Look at the money that you're going to be losing by not owning property over the next year. You don't have this tax write-off. You're having to pay the IRS every year. And then what are you going to do when you hit 65 and you look to retire? You're just going to sell the property. So that's kind of how I get over the rate objection. But to answer your question, the rates are right now prime. For this program, they're prime plus 1.75. So the last thing that I wanted to share under this program is, what do you do if you have a client that already owns their commercial space and they come to you, they're a business owner and they already own, what do they qualify for the program? So again, this program is the rent replacement program. These are for clients that are currently paying rent. So I had a dentist that came to me in January. He was leasing. We got him qualified under the 100% program. He came back to me last month and said, hey, I'm ready to expand my business. I want to open up a new location. Do I qualify for the 100%? I said, no, because you already own your location. I was like, but do you still need that $400,000 for the dentist equipment, for fixtures in your office, and for working capital? He said, yeah. So he found a property for $1 million. He's in a smaller market, found a property for $1 million. We did a loan for $1.4 million. So $1 million for the real estate, $400,000 for the working capital, the equipment, et cetera. And he came to the table with $140,000, which was 10%, and walked away with $400,000. So even in situations where they own the real estate, we can help the clients grow their business and get more money than they're investing into a property. Now think about that. He came to the table with 140,000 and walks away with 400,000. So as far as the development goes, what was that question again? I'm sorry.
So let's say you have a dentist client finds a piece of land somewhere in Los Angeles, okay? And they want to buy this and put a dental office on this land. And it may take, I don't know, 3-4 years to complete the project. What is the maximum time that this loan allows you to basically the time limit? I'm sure there's a time limit.
Yeah, so I mean, he would have to be building a pretty big space to, I mean, so they can't buy the land and hold on to it. If that kind of answers your question, they would have to, they would have to. So if it took, yeah, so it would take him 4 years to build an office building?
I mean, it can take
I've never
them
heard
that
anything
long.
taking-
That's,
Okay.
I mean,
Is this because he doesn't have plans and permits and all that, or?
yeah, correct. Yes. You're
Okay.
talking about find a piece of property and, it's just vacant land. There is no plans, there are no permits, starting from ground zero.
Okay,
Does that
so,
work?
so what we would do is number one, we would get him qualified beforehand. And he would go to closing before any of the construction was built. But obviously, the lender is not going to hold it for 4 years. I would have to find out the exact time frame. I've never run into that situation because usually what would happen is, it would be buildable. It would be buildable property. It just wouldn't be raw land. They'd have already gone through all that. But if it's going to take 4 years to get all the permits and the plans and stuff together, I would have to.
No. I said no. I said 4 years to complete the project.
Right. If it was going to take 4 years, yeah, I don't know the time frame to be honest with you, but that's something that I can let Andy know and he'll be able to get back to you on. Because I really don't know that answer. Usually they like to see it done within the first 12 to 24 months. If it's going to take longer, I'm not sure how that would work.
Okay.
But I'll definitely find out for you.
Thank you.
Yes, sir. And Andy, do you know who asked that question?
Well, actually, we were just talking about that, with someone the other day, and basically they're looking at, 18 to 24 months build out. But by the time we do, all the documentation for this particular loan, I mean, we have already a site identified, we have at least plans and permits are in the process. I mean, that's typically how it would work on the standard. Now, what you're referring to is something that is outside of the box, and we would have to determine what those parameters may look like, if they even qualify for this particular loan. Just wanted to clarify that. There's another question regarding, do we have special loans around affordable housing projects? I believe this wouldn't apply under the SBA. Is that true, Andrew?
I mean, I don't know of any special loans. I mean, it's something else that we can look into. I mean, I'd have to know more about the program. For affordable housing, there's obviously some tax benefits there to build in those areas. As far as the financing goes, I don't know of any programs where that's really going to benefit that's any different than anything else that we already have. So we'd love to learn more about the program and see what the most aggressive financing that we could find depending on that situation.
Yeah, like I mentioned, Andrew, you were out trying to come back in, and I had indicated that we specialize in basically the transaction and its merits, trying to determine and find the appropriate financing for these, special type of, what could be called one-offs, right? So we do a lot of what would be conventional, but a lot of what I'm hearing from this group, this is like a specialty product that you guys, are selling. And I would encourage you to, to run that by us. As I said earlier, I mean, it's our responsibility as a broker to find financing for every one of your deals where otherwise, you may not be able to get that deal secure at a bank just because of, the uniqueness of the transaction. So, again, just to restate, we're here to, to help, identify, and take each one of your transactions and identify the appropriate financing, because we're not one bank. We actually, have, gosh, 100+ banks. I mean, I can't remember what the count was, Andrew, but, it's many, many banks that we work with.
Yeah,
And
so we basically we dissect the deal. We look at the client's experience, we look at their credit, we look at what the end goal is and what they're looking to try to do. And then based on their relationships, we reach out to these different lenders, and sometimes we put them against each other. If it's a great deal and it's something that a bunch of people are interested in, we help, we have them compete against each other for our clients in regards to down payments and pricing and terms, et cetera. So, yeah, I guess with us, the advantage is we have tons of experience, we have the relationships, we have unique programs, and we're available, and we get things done quickly. We get back to you quickly. We don't work bankers' hours, and we just have a lot of experience. We've worked with a lot of clients over the years, and we have the relationships with the different lenders that are out there, depending on the project.
any other questions? Thank you, Andrew.
And I would also add, if the video is something that interests you, if you feel like this program, the No Money Down program, interests you, we're more than happy to work with you and get you a video made, and share with you the other successes that we're seeing from other commercial realtors around the country and how they're using it to bring in more buyers.
I can also send out your contact info so everyone has it if they do want to reach out to you about the video or anything you discussed today.
Very
Great.
good.
And then just
Awesome.
get with Andy with your scenarios, and we'll get together and we'll review the scenario, and even if y'all have some loans right now that have been turned downs, you have clients that they couldn't get approved. We love to look at them. I've looked at thousands and thousands of deals over my career, and a lot of times I can get stuff done that other people can't. So if you have any turn downs, you have clients sitting there wishing that they would have gotten their financing, but the bank said no, we'd love to take a shot at it and see what we can do to provide financing for those clients as well.
Okay, great. Any other questions?
I think you have Mary put her contact info in the chat, but
Yes, I got it here. Perfect.
okay. So I think that's all for the questions. Is there anything else you wanted to add just as a closing note?
Well, I would add that if you would like for us to, I know this program is this one program that we have that we talked about today. If you guys in the future would like to learn about financing on any other stuff, we can definitely do that as well. So just get with Andy and let him know what y'all would like to learn about on the loan side, the finance side, and we'd be more than happy to come in and share with you additional programs that we have that might fit more of a niche for other clients.
Okay.
Perfect.
So just briefly, one question and I'm done. Just so let's say I go to a client's business and they're renting, and just the rule of thumb is what is your net income based on your 2 years tax return, and you add that by the yearly rent, multiply by 8. That's how much loan we can get them under the 100% SBA loan for 25 years.
Absolutely.
Yeah.
So that conversation is, hey, question for you. How long have you been in business? Oh, we've been in business for 2.5 years. Awesome. How's the business doing? Are y'all showing a profit? Yeah, absolutely. We showed a great profit last year. And then yeah, taking it to exactly what you said, finding out how much money they made after all their deductions, what they claim to the IRS, adding back in their yearly rents to that amount and multiplying it by 8.5 if you have to. We can get aggressive at 8.5, and that's going to determine what they qualify for no money down. So the example that I gave, client made $100,000 a year net income. They had $60,000 a year in rents. That's $160,000. We multiplied that by 8.5. That came to 1.36 million. In that scenario, that client would qualify for a $1.36 million loan, no money down. If they found a piece of property they wanted to buy for 1.1 million, that gave them 260,000 that they could use for the cost of the loan, as well as any additional working capital, equipment, business debt, and fixtures for their new space. And the program goes up to 5 million.
And
Dave-
this doesn't collide with any existing SBA loans, right?
Well, for this program, you're allowed to have a minimum or maximum of $5 million in SBA 7A loans. So as long as you're staying under that $5 million threshold, you could have somebody buy two properties for $2.5 million, or they could buy do 5 loans for $1 million apiece. Or buy 5 properties for $1 million. So yeah, under that $5 million per business.
Great program, and also I like it's so easy to underwrite it.
Yeah, I mean, it's really simple if you're trying to talk to that client and finding out real quick if they qualify. Now, the other thing that we do that I don't know we mentioned, we're not a bank. So I've had problems in the past where you go into the bank, they tell you you're not approved. And that's the end of the story, right? So what we do is, if we can't help a client out right now, we're going to show them what they need to do to get financing. And what we'll do is we'll keep in touch with that client. That's your client. But we'll keep in touch with them and we'll work with them to get financing, and we'll get them to their end goal. So, we don't run through, we build relationships with not only the realtors that we work with, but with also the clients that we work with. And I like to think that we make you look good. It's all about working together and making each other look good and serving that client. That's what it's all about. So, we're not going to tell somebody that they can't do something and that's the end of the story. We're going to show them how to get to point A to point B. And because, sometimes it's not a race, it's a marathon, right? I mean, it's the end goal is to help the client out. And, we'd love to be able to call you in March and say, hey, that client that we tried to qualify back in November, they're ready to go. So that's how we do it.
David, did you have something else to add? I saw you unmute and.
No, basically, I just, I want to let everyone know that there's a lot of creative ways to get financing. Yes, rates have gone up. We all know. I mean, that's just across the board. And one thing is that more than ever, you gotta think outside of the box. You gotta use a creative approach, and what better than this? And these guys, I mean, I had Andy, he came into my office, so we appreciate him doing that. And of course, we'll talk after this. So guys, feel free. Why we do these Zoom meetings, as Kim and Meny can tell you, we got to be really on top of it more than ever. So we appreciate their time getting in and doing the presentation. And if you have questions, and even though I've heard it multiple times, I still have questions, right? Don't be shy. Give them a call. Let them, obviously, the experts do their part and help your client take it to the next level and make the next transaction. So we really appreciate your time, Andy. And I'm sorry, I've got so much going on. So really thank you for getting on. And I know everyone who's on this will definitely be in touch with you. And again, we appreciate you doing a nice presentation.
Very awesome. Hey, David, thank you again for the hospitality when I come and visit you guys. Kim, thanks for putting everything together. Meny, again, thank you for allowing us to get into the Zoom. And we thank everyone here and hope to, do business with you in the future and, creating and affecting your clients' lives in a very meaningful way. Thank you very much.
Thank you, Andy. Thank you, Andrew. And if you don't mind just sending me the PDF of your presentation, I'll make sure to get it out to the group.
Yes, perfect.
Okay. Thanks so much. And thank you everyone for joining today. Have a great day and we'll see you in 2 weeks.
Okay.
Thank you.
Thank
Bye-bye now.
you.
Bye-bye.
Bye.